What's going on? This is Fernando. I got your number from a friend. This is a hard money lender. You're a hard money lender, right?
Yeah. I sure am.
Cool. All right. Awesome. Yeah. So I am. I just picked up a property, and I've been using another hard money lender for another two properties right now. But I'm just kind of exploring some other options, and so your name kind of passed through um, from a friend, and I wanted to ask a few questions if that's okay. I just picked up a
Yeah, of
third
course,
property.
man.
I may be open to kind of testing out a new lender. Cool. All right. Yeah. Let me rapid fire a couple stuff. What's your?
Sure.
Let's see. So you guys operate in Georgia? Is there any states that you don't operate in?
I am actually in the state of Georgia. I'm in Atlanta, so
Oh,
that's
cool.
actually one of our top markets. And we are in 47 states. So unless you're in the Dakotas or Vermont, we can do it.
All right. Cool. Let's see. And then the terms in terms of like LTV, LTC. What do you guys usually do? Like, let's say of ARV, what's the max loan amount based off of like
So
the projected ARV?
I've got a lot of different loan programs. Talk to me about what you're trying to do. Is this single family flip? Is it new construction? Is it multifamily?
Single family burr.
Okay.
Yes, I guess
All right.
maybe single F burr, but it's really like a burr. Like at the end of it, we refinance and then we'll keep the property as a buy and hold. But yeah, single family.
Sure. But just to be clear, though, you're looking for purchase or acquisition and rehab dollars. Is that correct?
That's correct.
Okay. All right. So, talk to me about. I've actually got a couple questions for you before I can answer that. Um, Talk to me about level of experience with rehabs and/or properties purchased and sold in the last 3 years.
Yeah. So right now, two properties purchased and sold, and then we're in contract on two other properties that'll be purchase and rehab, and then this will be our third.
Okay.
So in total, should be five, right? This year, no, more than five this year, but yeah.
Well, you're under contract with those two. I wouldn't be able to count those two that you're under contract for until they were completed.
Okay. So just two then.
What were the what were the size of the deals?
The deals we're looking at are between 200 and 300 usually.
Okay. No problem whatsoever. Okay. So I've got you, let's see here. That would fall tier two. So we could do 85 of the purchase, 100% of the rehab, not to exceed 90% blended loan to cost, also not to exceed 70% of ARV.
Oh, yeah. Um, that's a tough one, huh? Okay. And is there ever a program that you could get to 75% of ARV?
Yes. So if you have 5 or more deals completed, I actually go to 90% of purchase, 100% of rehab, and 75% of ARV.
If I have five plus deals, you go to 90% purchase price. You said 100% of rehab still? Is that right?
Correct. And 75% of ARV.
And then 75% of ARV. Okay. And then just to confirm, when you say not to exceed 90% of loan to cost, so you're basically saying, if your purchase price plus your rehab, the max you'll actually loan is 90% of that.
That is correct. Yes.
Right. Okay. And then credit scores. How does like interest? Talk to me about like interest rates and how credit scores affect interest rates, or even if it's 5+ deals might affect interest rates.
Yeah. So experience and experience is really the driver. I'll just be honest with you, by far. And from a FICO standpoint, we can go as low as 620, but if it's 620 to 660, we are adding 50 basis points to the rate. If you are so anything under 660 gets 50 basis points. If you are above 740, we will subtract 25 basis points from rate. And rate right now is going to be anywhere from 9.5% to 10%.
Okay.
and you are only paying on drawn construction funds. So if you give me $100,000 budget, you're not paying interest on that until you actually draw it down.
Right. Let's see. And then do we have to front the money first and then we go to you and you send an inspector out to give us the funds, or is it? Okay.
Yep. That's exactly right. So it is a reimbursement type draw system. So you would get that work completed on a line item basis, right? So you don't have to go in any sort of phases. You just complete that line item, whether it's kitchen cabinets, flooring, whatever it is, roofing. Once that line item is complete, 100% of that line item for the roof would be dispersed to you.
Okay. And then is there a cost per draw?
$200 every time the inspector goes out.
Yeah. Okay. And then when we want the inspector to go out, do we have to stop work, or we just continue doing work? The inspector goes out to check off the items that have been completed, and then we just...
You got it. Yep. And let's say you're halfway through drywall, but half the drywall is installed that you had on your line item. That's fine. We can do partial draws for that as well if half the work is completed so far.
Cool. And then the points on the initial, what would the points be?
You would be at 2%. Well, let me rephrase that. Anywhere from 1.75 to 2.
Okay, 2% to loan. All right. Minimum loan amount.
$75,000.
Oh, really? That's cool. Wow. Yeah, that's really nice.
We're a Southeast company, man. We're still used to the low dollar amount.
Yeah. I'm in California, so sometimes they're like 200. It's like, all right.
Exactly. Yeah. Especially the California lenders. They don't even. They're like, man, I can't even buy a car for that.
Yep. How about
we still lend in Georgia, Alabama, the Carolinas, and every now and then we see loan amounts 80,000, 100,000 still. So we're fine with that.
Yeah. No, I appreciate that. In terms of seasoned funds, does it matter where the funds come from for like the down payment, or how, if it needs to be seasoned in an account?
It does, yeah. So good question there. So whoever is in the LLC that is going to be on the loan, we have to have 50% of the LLC signing guarantees on the loan, right? Now, we do offer non-recourse. Excuse me, that is incorrect. Once you get to 5 or more, we could offer non-recourse. Where you are now, a recourse would be the only option. And we'd have to have 50% or more of the percentage members sign the loan docs. And ultimately, that is who we are looking for the cash to be from.
And if, let's say a week before, I get funds deposited from you from like a private money lender. Because in my private money lender, I'm paying whatever 6% for their funds, but I'm still signing on the loan. But I just received that money a week ago. Would that still qualify, or
well, what did you receive the money for? This particular deal?
Yeah, exactly. Because let's say, I'm.
So you're doing a second lien?
It's not necessarily. It's more like a promissory note.
If it would be filed with title,
no, it wouldn't.
Not allow second liens. So are you getting like a personal loan?
I guess this happens all the time in real estate, right? Like if you're trying to raise capital to go and buy a property so that you could rehab it and then refinance and pay people out. And so what we do is we structure a promissory note, and the promissory note is just a piece of paper that says, hey, I promise to pay you back. I promise to pay you 6% to 8% or whatever in interest monthly, or at the end of when I finish in like 6 months. And then you're like, I'll give you back all your capital plus whatever interest we agreed on at the end of 6 months when I finish rehabbing the property.
So totally understand what you're getting at there, right? So, but how is that note secured? Is it inside the LLC that is going to own the property, or is that note on title, right? No, is it going to be filed as a lien?
It's not filed as a lien. No, so it is just a legal document between the LLC and the person. Wow,
so that's like an unsecured line of credit that you're getting? Wow.
I guess so. I mean, It really is, a lot of it's based off trust. I mean, some people will ask for a deed of trust, and in the case of a default, they could ask for a deed of trust.
Right.
But as even as a deed of trust, they're not on title, right?
That's not a
Okay, I see
lien.
what you're saying. Well, so the way I have to answer that really, right, is we would be fine with you bringing on someone in the LLC that would be like a limited partner, so to speak. We see that all the time, and they don't necessarily have to sign it as long as they're under 50% ownership. So we would allow you to structure it that way, but we don't allow second liens of any kind, and we do source the funds. So we're going to ask for 60 days of bank statements. And so let's say that you sold a property and you got those proceeds. Of course, that counts, right? But we are looking for the liquidity to come from those that are signing the loan docs. That is the most simple way to put it.
Yep.
Whoever is signing is really who we want to kind of have their own skin in the game, so to speak.
Right. I got you. So then, no, that makes sense, and especially if you're even as a limited partner, you said, hey, yeah, this person's got 1%, ownership or whatever. They're a limited partner. You're not then gonna go and try to qualify. You're not gonna go and ask them for their credit
No,
score.
we don't have to pull their.
and all that
No,
stuff.
that's right.
Right.
But
It's
we can
only
see
the people that
them
have that
in the
50.
operating.
Right, but you want to see
That's
them in
right.
operating unit. And so then now
That's
that
right.
person can submit the funds.
or it's okay for that person to send me the funds, right? And then we use it. Cool.
That's right. But they're a part of the borrower group, even though we don't have a personal guarantee from them. We can at least see what's going on there.
Right. Okay. And then, yeah, you're just looking for EIN, an operating agreement, and articles of organization, probably, right?
You got it. That's it.
Okay. Let's see.
Just out of curiosity, who'd you work with on the past couple deals?
It's a broker. Yeah, I honestly don't. I'm not sure who is using on the back end. But yeah, it's just a broker, and I was just curious. Oh, the last question I have.
I mean, you sound pretty familiar with it, with what my requirements would be. So I was just curious if it was someone that was similar to us.
I'm not sure. Yeah, just a broker. And so I guess the last question would be on your appraisals, when you do a pre-appraisal to go and I'll send you the scope of work. Maybe you send that to an appraiser. Are you guys doing like desktop appraisals, drive-by appraisals, full appraisals?
So the answer is it depends, right? I want you to go into the process assuming that we're going to have to do a full interior appraisal. So, and in most cases we will. Now we are doing what we can kind of call desktops, to where the inspector will go in, verify that the budget is accurate, and there's no major deferred maintenance that you aren't addressing in the budget. Like the other day, we went out and there was a tree that fell through the roof, and there was no budget for fixing that, right? So that's the kind of stuff that we will go out and see. In a lot of cases, we can use those photos and give it to the desktop appraiser. We also have an internal valuations team, but we are only doing about 10% of those right now. So, and they have very specific categories that they have to fall into. So, a $200,000 to $300,000 loan in the state of Georgia would qualify in that category that we are allowing this new rollout of internal valuations. But still, 90% of our deals are having to go to a true third-party appraiser that's going to need access and is going to give us the ARV.
Right. Okay. And then is the offer, or like the ability to loan on the purchase, subject to that appraisal contingency, or there's really, on the purchase there's no appraisal contingency, it's just on the ARV appraisal?
Yeah, well, I mean, the appraiser is going to give us an as-is value, which, I mean, 9.9 times out of 10, it's exactly what you're paying for it.
Got it.
Just on the purchase, and then the appraiser is also going to give us the after repair value based on your budget and renovated comps in the area.
Okay, cool. Yeah, no, I don't have anything else then. Anything that I should be asking that I haven't asked so far?
Now we covered credit, borrower structure. Trying to think here. man, everything else is pretty straightforward, or we try to keep it straightforward at least. So, yeah, as far as documentation, I would just need to see those couple properties that you flipped. I could just send over a track record form, LLC, bank statements, photo ID, and then a one-page borrower application. And then on the property side, we just need to see the purchase and sale agreement and a line item rehab budget, which I would have to get you to fill out on our template so that we can upload it online. And you can simply go after closing and take draws online and say, okay, here's what's completed, here's what's not. And most draws are getting out in the state of Georgia. They're getting out in 3.2 days on average, and the rest of the country, it's closer to 4 days on average. So, trying to think, our max loan amount is $5 million on these type of deals. No prepayment penalty. And I've got 2 term options. I can do a 13-month interest only with no prepay, and I can do a 19-month with no prepay as well. 19-month does add 0.25 to the fee.
Gotcha. Got it. No, good to know. Yeah, no, most of ours honestly are like 2 or 3 months, pretty quick.
Pretty quick in and out.
But I'll just be really transparent. We really do need that 75%. So it looks like I wouldn't probably be able to use you guys until I get to the 5+ deals to consider, because we run our numbers. Like we'll still keep some money in the deal since we're keeping it as like a buy and hold. But yeah, that's the difference between 70 and 75% is.
No, look, I get it, right? Because that's going to increase your down payment. The one thing I will say, I've closed 5 loans just this week in Atlanta, and all 5 came in under 70% of ARV. So I mean, look, that's not to say that yours will. Who the hell knows? I can't promise you anything on that, but
yeah,
we aren't running into too many issues. Every now and then, of course, you do. I can't promise anything on a third-party appraisal, but
are you seeing that?
That wouldn't be too big of an issue for you.
Are you seeing if ARVs from appraisers right now are they coming in lower than normal because of how the market's been changing, or are they seeing?
It depends on the market, right? It's very rare that we see that in the greater Atlanta area, Charlotte, so some of your growth markets, we just aren't seeing that. I don't do a ton in rural areas or more rural or tertiary type markets, but I am hearing from others in the company that those are starting to lag a little bit. So yeah, I don't really know how to answer that on a nationwide scale, so to speak. I mean, it's going to be different in Cleveland. I did a deal in Cleveland the other day, and those values, the appraisers are just not going to give you top dollar in a market like Cleveland. But
yeah,
seeing too many issues in Georgia, Florida, North Carolina. I mean, man, we're closing last month. We did $300 million. Now that's with multifamily rental loans and fix and flip and new construction, right? I mean, we offer all of that. So I don't think we could get to those numbers. I mean, we're hitting pretty solid numbers now. If we were having too many appraisal issues, there's no way that we could get to that number. So it's not a problem as of now, but it's hard to think that at some point it won't start to creep in a little bit.
Okay. No, I got that. All right. Well, I appreciate the call and thanks for answering all the questions. Yeah, I'll keep you posted from here.
Yeah. Listen, this is my cell phone. So if you want me to run quotes or just talk through a deal, let me know.
All right. Will do. Thanks so much, man. Take care.